Sorry to spring this on you last minute. That's what JC did to us. We were waiting for him to log in, and then he pings me. He's like, "Oh, I can't do it, dude."
I was breaking his balls because I'm like, for somebody who feels so sick, you're talking a lot today.
It's your boy, Chicago Sean McLaughlin. I'm the Chief Option Strategist at All Star Charts. Today, pinch hitting for JC, we've got Steve Strazza, our head technical analyst. What's up, Steve?
Howdy. How we doing?
Hey, man, thanks for pitching in last second. Literally, we were about to go live, and JC's like, "Oh, dude, I can't do it."
Yeah, a little under the weather.
He a little under the weather, yeah.
He went for 2 hours last night on the conference call, so.
Yeah, and we did a live Twitter Spaces this morning. He seemed fine, but all of a sudden he's sick now? Okay. All right, man. Well, hey, we're going to jump right into it. We don't have a whole lot of time. But if you were on the Twitter Spaces this morning, we kind of talked about putting on a bullish risk reversal in the NASDAQ 100, QQQs. The NASDAQ has rallied pretty significantly intraday since we first looked at putting this trade on. So we've kind of moved the goalposts a little bit, but still like this trade, Strazza. Let's break through this chart here real quick. What are we seeing here? How are we feeling about that low from last week?
Really, where we're defining our risk right now at the index level for all of the indexes is really those January lows. Those pivot lows from January are really giving us a nice place to define our risk against. You know, I didn't bring along a chart that's a little bit more zoomed out, but if I did, you would see the triple Qs line up perfectly. The January lows line right up with the April highs, like those first half 2021 highs, around 340 and change. So really, we want that to hold, and we're looking for a squeeze above those lows, right?
Right. And one thing you'll observe with this chart is it's very easy to notice that last week we had that ugly red candle followed by that huge gap down opening, but then we just rallied all day, that big green candle from 4 days ago. When you look at that, it's like, oh man, there's a lot of risk down to 320. But if you look at the closing prices through those days, Straz, I mean, really it's the red candle closing price that we're paying the most attention to, at least giving the most credence to. And we started looking in the options chain. This whole trade discussion started out as we were thinking we just wanted to sell some puts. We wanted to sell premium. That was where we were at. That's where we are kind of in general right now with the market, with VIX being over 30 and premiums elevated all across the board. So we kind of started out saying, hey, well, why don't we sell puts at NASDAQ? We feel like this low can hold. And then it just kind of started looking at the options like, well, wait a second, why don't we sell some puts in NASDAQ and buy some calls, turn it into a risk reversal, because maybe this thing's gonna, rip higher again after a pretty significant recent low. Yep. And look, I liked that idea. So yeah, thanks for bringing up the chart. So what we decided to do here is we like selling the 325 puts. The 325 puts are below the lowest close that we saw in NASDAQ last week. Yep. We're able to sell. What we're going to do here is we're going to take the proceeds from selling the 325 calls, and then we're going to turn around. I'm sorry.
The puts.
Take the proceeds from selling the 325 puts, excuse me. And we're going to take those proceeds and turn around and buy the 360 calls that are currently out of the money. And we want to do it for a net credit. Now you can see the prices in the chart there, 715 for the put and 713 for the call. Ignore those prices. That's the screenshot I took about an hour ago. The prices are moving around. They're going to be all over the place. But the important thing is we want to put the trade on in a way that we collect a net credit. I'm not so concerned about the total value of the credit. I don't care if I get 30 cents, 50 cents. We could have got $1 earlier this morning. I just want to have some kind of a net credit. I can tell you, I put this trade on about an hour ago. I got 20 cents net credit. You could probably get a little bit more right now. But again, prices are moving. We're all over the place.
How do you feel about moving up and selling the 330 put if you need to?
I don't love that idea, if I'm being completely honest. If you bring back that chart back up that you had. I don't love it because I feel like it will get us above that closing low from that red spike there.
Yeah,
right
is.
There.
The closing low from last Thursday was about 29.
Yeah.
Yeah.
So I don't love it. I don't love it. 325 is about as high as I want to go. I want to have some room here. I mean, look, we're still in a volatile market. Qs can go higher from here, but maybe not without some whipsaw action before we get there. So I'm leaning more towards having room.
The bias is really sideways. You know, you're going to get whipsaws in this kind of an environment. You got a flat 200-day moving average. That's not on the chart either, but if you threw a 200-day moving average on there, it's going to show you the trend is really nothing right now. We're trendless.
Yeah. Well, the nice thing about the trade that we're doing here with the risk reversal is that as long as the Qs don't break our risk management level, which is going to be 325, any close below 325 in the Qs, we're pulling the plug. We're going to get out of the trade because we have theoretically unlimited risk when we're naked short puts. So any close below 325, we're out. But as long as we stay above 325, even if we don't rally up to our calls at 360, the worst case scenario here is we'll walk away with the net credit that we received when we put the trade on. Now,
right.
I told you that I collected 20 cents. I'm not in it to just win 20 cents here, Strazza. So that's not my goal.
Right.
But it's nice to know that, hey, if the thing goes sideways or it doesn't go up as fast as we need it to, at least we're going to walk away with some kind of profit.
If you're wrong, there's very little harm, ideally, if you manage this trade right.
Right. All we really need to be concerned on from a risk management point of view is any close below our short put strike at 325. That's where we want to get out. Now, on the flip side, what we really want to happen in this trade, in this risk reversal, is we ultimately want to morph this trade into a simple long calls trade. Yeah. And the way that we do that, the way I do that, is let's say I put on a 2-lot trade, right? Let's keep it simple. Let's say I sell 2 naked puts at 325 and I buy 2 360 calls.
Yep.
Okay, so two and two, right?
Yep.
Now, what will happen is if QQQ starts rolling higher, starts moving up, the calls will increase in value as you would expect, and the puts will decrease in value. If we get to a point where, let's say, I'm just making numbers up here. Let's say those calls that I'm long are worth $10 a contract, and the puts that I'm short are worth $5 a contract. I could sell one of those calls for $10,
yep.
Turn around and close my 2 short puts, $5 a piece, for $10.
Then your long calls, yeah.
Yeah, net, it didn't cost me anything. And now I'm still holding 1 remaining call position totally free. A risk-free, we call that a free ride here. And hey, thing might go to the moon. That'd be great, but it doesn't have to. At least we know that worst case scenario, we're walking away with that original credit that we collected when we put the trade on, and we got a free call on the upside.
Right. And if we get a strong automatic reaction higher here and rip through that 360 level, make a fresh higher high, you can do pretty well.
It's going to be a nice trade, and we're going to be real happy we did it. So that's it. So to recap, bring up that risk management chart there, Strazza. So to recap, we're putting on a bullish risk reversal, QQQ. We're selling in April, the 325 puts. We're purchasing an equal amount of 360 calls. We're trying to do it for a net credit, whatever you can get. I got 20 cents. You might be able to get more or a little bit less right now. I don't know, but let's try to get a credit. That's the best way to do it. That's all we got. Thanks for seeing us today. We threw this together last minute. Strazza, the best pinch hitter in the business. Thank you. We'll be back at you next week. Hopefully JC will be back. In the meantime, have a great trading week. We'll talk to you later. Thanks, Steve.
Bye, everybody.